morning, everyone, or afternoon, depending on where you're located. My name is Anae Agostini. I'm CEO of CID Insurance Programs, and we are putting on a wonderful webinar today, one of my favorites, Garage Insurance Made Easy. Our instructor today is very talented and knowledgeable, Patty Dutton. She's Regional Manager for Music Insurance. And then on the line for questions and comments is Teresa Cochran, who's our garage underwriter here at CID. And then our marketing specialist, Jacob Cole, who runs the whole webinar and puts this all together for you and takes good care of you guys to make sure that these webinars go smoothly. So thank you, everyone, for joining us. And I am going to get us started. I'm going to reverse this. I'm going to start with the logistics. I wanted everyone to know that you're going to be defaulted to mute, so you'll be able to hear but not speak. And that's because there's so many of you that we just cannot afford to we cannot afford to have everybody talk at once. So we're going to keep you on mute, but everyone can look over and see the little chat room on the right-hand side on the bar, and that is where we would like you to type in any questions throughout the whole webinar. At any time you have a question, please type it in, and we'll answer your questions as we go along. We've got super knowledgeable people who can help you with that. So that will make it, that way we'll get all your questions answered. So let's talk about what we're going to learn today. And that one of the main things that we see a lot of is the connection between the coverage that the insured needs and how to communicate that on the garage application. So Patty's going to be talking a lot about how that, how to connect to determine the coverage is needed and where on that garage application you would communicate that. And she's also going to spend time on what those coverages, the coverages that are unique to the garage form that you need to be aware of, excuse me, and identify the coverage that's needed for each garage risk, as I mentioned. So let's get started. Patty, I'm going to turn this over to you.
Thank you, Anae, and everybody for joining us. So, time. Is there ever enough time? Right? No, of course not. Think about the submissions that you receive. Is anybody not in a hurry to get a quote? Well, I'll tell you what, if your inbox looks like mine, it's full of email with red flags or the word rush in giant letters in the subject line, right? So how do you get back some of that time? Well, when an application has everything that I need in order to respond back to Anae and her team, it keeps everybody moving. If I have to ask questions, it's kind of like hitting a speed bump. It just slows the process way down. So today we're going to talk about making sure your submission flows through the process as smoothly and quickly as possible, and that your quote offers all of the coverage your insured needs. So let's go to the next slide and start talking about what do we need. Now remember, the focus of this presentation is the speed bumps kind of thing when I'm talking about which blanks to make sure you've got filled in. So I'm not going to waste time on the obvious stuff. Like, of course, we need their name and the policy period and all of that. But let's look at the information that, when it's missing, means the underwriter has to come back with questions instead of a quote. So we kind of listed them here on the right on the screen. The first one is the description of operations. It tells us right away, what are we looking for? Are they a dealer? Are they a repair shop? Do they do a whole bunch of different stuff? And it's kind of funny to see what they'll put in that line. You'll get a lot of different information that you don't really ask for anywhere else in the application. Years in business is important because it tells me how much loss history to look for. If it's a new venture, experience is even more important. I know that as a carrier, we look for 3 years of prior experience if it's not a dealer, so your repair operations or valet. But we don't ask for experience if it's a dealer. So that's kind of a hint for you. If you've got a service risk and it's a new venture, make sure you put in their experience and then just describe it. The prior carrier and loss history, if they're blank, it should be a new venture or the loss runs should be attached. But give us something to go on so that we make sure that we can see what the exposure is, how well it's performed, and how to price it to get it back to you. I don't see any questions so far on this page, so let's go to the next one. Okay. Now, the garage coverage form defines auto as a land motor vehicle. We can use symbols to cover things like boats and equipment on the garage policy if we know the exposure is there. When that exposure is not disclosed, there could be no coverage in the event of a loss. So it's important to make sure that if they sell even just a little bit of something or repair just a little bit of something, try to just get a percentage in there, even if it's an if any, and you put a 1 in there. Because that way we know if they have garage keepers or dealers physical damage that we need to use that symbol to make sure the coverage applies to a loss to a covered, what should be a covered auto, quote unquote. Now, you'll notice that there are stars here that say complete a supplement on several different lines. The supplements capture information that we only need for certain vehicles or operations. So if there is a heavy truck, motorcycle, there's some stuff that we need to know in order to get you your quote. If you give us the supplement, we can just race through it, make sure we've got what we need, and get it back. Easy peasy. At the bottom of this screen, the do you questions. We have do yous all throughout our application. And they identify special exposures that may or may not pose a need for additional coverage or exclusion or something like that. So, for example, here you can tell if they use subcontractors or not. Is it a big deal? Well, let me give you an example of one. Let's say you've got a dealer and he is selling salvage titled vehicles, but they aren't salvage title anymore. He's repairing them and fixing them up, but he sends the major work out to somebody else. If there's a loss as a result of that, what we need to make sure of is that his subcontractor that does all that heavy lifting has insurance of his own. Bonus points if they add our insured as an AI, but that'll depend on how much interaction they actually have. If they say they loan, lease, or rent cars to others, that's a red flag because the garage coverage form excludes leasing or renting of vehicles unless the insured is repairing the customer's auto at the time. Whenever there's information asked for where there's yes and then we ask for the details, you don't have to write a book, but if you could just give us a sentence, say, yes, they use subcontractors for blah, 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 or, whatever it is. Let's see, is there anything else I wanted to mention? Oh, so animals and lethal weapons are excluded in our policy, but we do ask the question because it gives us a chance to find out what is the exposure. If there's a dog on premises, the insured needs to know that we have that exclusion. So if Fido does bite somebody, they'll know there's not coverage. Known dangerous breeds should be kept in a pen or cage during business hours, but all dogs really should be kept away from customers. A dog can bite if provoked, and you know how the story goes when the claim comes in. There's nothing about their 6-year-old that was teasing the dog and throwing rocks at it before it bit. All you hear is their dog bit the kid, and that's actually from my prior claim experience. So just something to keep in mind. If they have weapons on premises, are they selling them? You'll see a lot of shops that will do all kinds of different things to keep body and soul together. And some of them may have a gun cabinet. They have to have coverage elsewhere for it because it is excluded on our policy. All right, let's try the next slide, Ine. Okay, this is the dealer page. We're interested in the nature of the business because these businesses are all quite different from each other. Some applicants will do just retail sales. That's probably the majority of what you'll see. Some might do 80% retail, 20% wholesale. Some will throw some consignment in. You don't know. But properly completing that percentage is going to tell us how to categorize the risk for rating purposes, and it helps us know what questions to ask. Here's an example. A broker will usually locate a vehicle for their customer, and then they facilitate the deal between the customer and the dealer. They rarely, if ever, take possession of a vehicle. So if a broker is asking for physical damage coverage on the app, I kind of want to know why. I mean, maybe they're furnished a vehicle and they sometimes have one in their possession. That's fine. At that point, the limit wouldn't have to be very high to meet the coinsurance requirement, and we basically have an understanding of what the exposure is. Import, that is a prohibited operation for us. So knowing what the percentage is tells us whether we can just exclude it or if we have to pass on the entire risk. Salvage titles and wholesale are different animals entirely. We have supplements for those for that very reason. Providing any supplements that we ask for up front, it really helps us avoid that speed bump because we've got everything we need to keep you moving. How many cars do they sell a year? Well, we actually care about that. And we care about how many dealer plates they have because it's reflective of the driving exposure. So if there are 4 people who are all furnished an auto, and then you get down to that section and all they do is sell 2 cars a year, that's kind of a glorified personal auto policy. It's way more driving exposure than I would prefer to handle in that situation. But you might have just one person who's a collector or does this as a hobby, and he or she, that's the only person furnished an auto. Now, if that guy only sells 2 or 3 cars a year, that's something that we can work with. Really, we're just kind of looking for this section to make sense. The states where they conduct business help us, probably more so out in the east than in your area. We're very careful of New York and New Jersey out east, but if they list their states, that helps us determine that the mileage radius they're asking for makes sense and is going to give them the coverage that they need. And then knowing who transports the vehicles, of course, pay attention here because if they use contract drivers, we don't have a problem with that, but there may be some verbiage that has to be added to the coverage forms, and we do rate for it. Not a lot, but it kind of just depends on if it's a known driver, like Uncle Billy always steps in and goes to auction if you're short a driver, or whatever that may be. Now, the do you questions in this section really help us identify more driving exposure. But they also tell us whether the risk follows good practices in allowing test drives, as well as if they were to finance an auto. You would be amazed at how many claims we get for an accident caused by a customer who purchased a vehicle from our insured, but the title didn't get transferred. And I'm not just talking 2 days. I'm talking a month, 2 months, 6 months down the road. We do have an exclusion for this on our policy, but, if a loss is really bad and there isn't any other insurance, the court can overrule it and just say you're paying. So it's just a good idea to make sure that they have all these practices in place and that they are acceptable. Accompanying customers on test drives tends to reduce the opportunity for loss. It definitely reduces the opportunity for someone taking the vehicle and not bringing it back. Having a personal auto policy in their household, just to back up a second, if they say that they're not furnished an auto in the section below that we're going to get to, and then they say no, they don't have a personal auto policy in their household, that doesn't make sense. I'd have to kind of call that one out and say, well, wait a minute, which is it? Are you furnished an auto or do you have a personal auto policy? Extended or overnight test drives, I don't know of anybody that allows for that, and so it's really important to make sure that they don't do it. The best practices are to get a copy of the customer's driver's license and proof of insurance. And if you don't accompany everybody, make sure you accompany anybody under age 21. We have a driver exclusion for anybody under age 21 unless they're a customer who is being accompanied on a test drive. And then, of course, we do allow a submission for employees who aren't furnished an auto that are between 18 and 21. But you just want to make sure they're not sending kids out there by themselves because there is no coverage. On the buy here, pay here, rent to own, all of that kind of stuff, that's where I'm talking about the title transfer. The percentages, anytime we ask for percentages, by the way, they really should equal 100%. I have to laugh when I get some that you get them and they add up to 222.5%, and you're going, and you run a business? So, just common sense, 100%. And also the rating, just to mention, the rating is not only impacted by the nature of the business, but by the number of dealer plates and the mileage radius that they drive. All righty, that is it for this one. Shall we go to the next slide? And does anyone have any questions? That was kind of a lot to talk through. So if you've got a question, I'm happy to try to answer it. All right, well, we'll keep going for now. So typically a non-dealer is going to have less driving exposure than a dealer. In fact, a lot less. So our questions are going to revolve more around the operation itself. The nature of the business here is you either repair on premises or you're mobile. We write a ton of mobile repair. We don't charge any more for it. It just means that if they want garage keepers, we quote that at legal liability because they don't have control over the premises. So let's see here. I want to make sure I'm not skipping anything. So here's our do use section. We have our do use. As it turns out, customers are not good at driving vehicles into the bay. We have a great video that we showed at our underwriting seminar this last summer of a customer trying to drive in for an oil change. And so you picture the garage, and there's this ginormous pit in the floor. And of course, she pretty much drove right into it. And we also get quite a few claims where employees just try to drive a car in and they hit the building. So it's just, I guess I'd rather take my chances on the employees because we at least have their MVRs and stuff. So they really should not allow customers to drive vehicles into the bay. Parking vehicles on the public streets leaves them open to getting hit. Whenever we get recommendations back on an inspection, the next 3 are usually on there. They really need to have signs posted to keep customers from the work area, have a no smoking sign, and make sure their fire extinguishers are serviced. If they have repair or transporter plates, and by the way, these vary by state. Every state has different rules about repair plates or transporter plates or whatever name they have for them. We just want to know that they have them because it tells us whether or not we need to get MVRs. And also, it's possible to offer coverage for those. If they pick up and deliver customers' vehicles, again, we would need the MVRs, and we're just trying to gauge what is the driving exposure on this risk. If they sell autos, so you could have a repair shop, and they fixed a car for the customer, but the customer abandoned the vehicle because they couldn't pay for the repairs. So your shop can take the title eventually and then turn around and sell the car to recoup what they put into it. We're going to be doing a forms update soon, and one of the changes is going to allow us to offer dealers physical damage to these guys. So that'll be kind of fun, being able to have physical damage on a non-dealer policy. And then as well, we can package related operations like parts sales and gas pumps on the garage policy so that there is no need for a separate GL policy. And I don't see any questions, so we will keep going. All right. This is another section that helps your underwriter know how to categorize and rate the account. I'd like to give you a couple of examples of how the answers on this page help you make sure that the insured has the right coverage. And again, It really should add up to 100%. So let's say you've got somebody that's a repair shop, but they also have a convenience store. You'll notice about halfway down on the left, you'll see convenience store. And we ask a sub-question. Is there a cooking or a restaurant exposure? We want to know that because cooking or restaurants are more properly covered on a general liability policy. We can give you the coverage that you need by putting both the garage and the general liability deck pages and coverage forms all on one policy. That way you package it and they have what they need to provide the coverage that they need. But if it's just a C-store and they're not doing any cooking, there's no food like that, we just package that onto the garage policy and we don't have to worry about the GL because we've already got it covered. Another example would be the gas station at the top on the right. Most of the country is self-service for pumping gas, but in Oregon, it's full service. So why is it important that you check that? Well, we rate garage based on people. So if we rate payroll for the employees who are pumping the gas, and then we turn around and rate for the gas based on the pumps, we've just double dipped. You've now double charged the insured for the people who pump the gas. So you don't want to overcharge the account. What we want is to get the money for the exposure. So that's another example of how that would work. Now, acceptability. Let me give you a couple of examples on that. So take, for example, a car wash. And we've got a lot of sub-questions in here. I will tell you that the two loss leaders for car washes are damage caused by an automated wash and damage caused by the customer driving through the automated wash. We really just like the full service ones that are hand wash, but we understand that these other places do need coverage as well. So by asking, is it full or self? Is there an automated car wash on the premises? And if there is, who's driving it through? Then we understand what's needed in order to properly quote the account. Kind of a coverage dilemma, I guess, if you will. Let's say you have coverage, garage keepers coverage, and garage keepers, just to refresh your memory, means that the insured has a non-owned auto in their care, custody, and control. So, brain teaser. If the employee is driving through our car wash, is the vehicle in our care, custody, and control, or is it in the customer's? If it's an employee, it's ours. But if it's a customer, they still have care, custody, and control of their vehicle. Or do they, because they're getting pulled through an automated wash? Thus the brain teaser. Another example might be framework. So straightening a frame is fine if they know what they're doing, which we can tell by the experience that you gave us on page 1 and by the loss history. But if they're cutting or stretching frames, that's a different matter altogether. And by the way, as you know, metal doesn't stretch. I don't know who came up with that, but I think probably the stretch limo people. But you got to watch where they're cutting, because if they cut between the axles of the car, this has a direct impact on the load-bearing capability of the frame. How strong are the welds? How are they putting it back together? We don't really want to go there. And so for us, it makes the risk unacceptable. But if they're cutting ahead of the front axle or behind the rear axle, then that's a lot more palatable, and we can work with that. Another comment I would make on this is if there is any percentage for body and paint shop or fiberglass body repair, please be sure to answer the 2 questions at the bottom of the page. For body and paint, we're looking to make sure there's no exposure for overspray. So that's why, and we don't look for a UL approved paint booth and all of that. All we ask is you got to have a separate area that's ventilated. And that will prevent overspray, and the ventilation prevents any kind of problem with fire. And then also the storage. And that's a big deal for fiberglass as well, because the resins for fiberglass are highly flammable, so they need to be in a fire-resistive cabinet. Oh, what if no one drives through? Let's go back to the car wash. I like this. If no one drives through, there's nobody in the car. It's that's interesting. Um, that's a good question. I think if no one drives through, we would pass and put it on a GL policy. That's the garage answer. But again, if it's just in the car wash, I think you'd have to have GL coverage on that car wash and not worry about care, custody, and control at that point. Interesting point. Thank you. Does anybody else have any other questions? Okay. Okay, this is a good one. Here's a couple of hot topics. So I'm going to start with tires. While some carriers will limit the percentage of tire operations that they are willing to accommodate, we do write 100% tire guides. However, we cap our liability limits at 500, 500, a million if it's a tire dealer. We're just not willing to put that $1 million out there on the table. Our policy, like many others, has a liability exclusion for used tires, and I want to stop for a minute and explain that. So if I sell a used tire, and she's driving down the road, and because the tire was super old, it had dry rot, and so the tire just disintegrates on her as she's going down the highway, and she ends up in an accident. That would be a used tire exclusion example of no coverage. Now let me give you a different example. I sell a used tire and I put it on her car, and she's driving down the highway again, and I didn't get the lug nuts tightened. So the wheel flies off and hits the car behind it. That's covered. The used tire exclusion applies to that rubber, not the workmanship of tightening. But you see, that's why we ask these questions. So we want to know whether or not you've got proper procedures in place to make sure that your tires are properly installed and inflated and all the lug nuts are really tight and your tires are not over 5 years old, so that there's not a bigger risk of dry rot. Renting and leasing tires is a new thing. And heavy trucks, those tend to fly off pretty easily as well. So we just want to make sure they know what they're doing. I think everybody is scared of tires. So we'll do it, and we'll do it if it's 100%. But the other thing I'll tell you is they're going to need to be asking you for 2 years loss runs on those. We don't do the new ventures. So if you send Teresa a tire dealer, just attach a couple years of loss runs with it, and then she won't have to come back and ask.
Patty, how much in the used tire percentage are we taking?
Yes. So that's actually what I was going to talk about next.
Sorry.
When something gets No, that's good. That's a good segue, by all means. So when something gets to be over 50% of an operation, not even just used tires, right? But if you know that somebody does 75% or 100% of something, and you write them an insurance policy, and then you exclude that, okay, it's really not fair, number one. But it's also, if it were to go to court, it would be deemed legally against public policy, okay? The only way you can do that is if that piece is covered elsewhere. Then you can exclude it. So what we do is we go up to that 50% line. If it's over that, we won't write the liability in garage. But what we can do is our GL department can do a premises liability policy. They're not going to offer products either, but they'll do the premises. And then what we can do is write a monoline garage keepers policy if they want that coverage. So we still have ways to write it. We just can't do, if it's over 50% on the used, we just can't do the garage liability.
So Patty, we have a question. Do you have an example of a completed application showing answers you were looking for? Maybe that's a Teresa question.
We don't, just because there's all kinds of different garage risks. I'm
and
not
different
sure
answers that you would be
that we'll
potentially
be looking for in every different
yes.
situation. Exactly. Mm-hmm.
Right. And
Right.
so I completely understand that when someone's maybe even newer to the garage application, that they might need a little bit of guidance on how to, and what we're looking for, so it would be difficult. I'll promise you this: we'll take a look and see whether we could do some scenarios in a completed app, and then we'll publish that on our website.
Oh, that's a great idea. Yep. Yeah. I think you can't go wrong if you answer the questions that apply to the risk you're trying to underwrite. You just can't go wrong with it.
Okay.
So very cool. All right.
Are we on this page?
We need to do. Yeah, we just need to talk about storage for a second. So storage, you want to. It's going to apply to both garage keepers and physical damage. On our policy, there is a theft exclusion that applies when the business is closed or unattended if the lot's not secured. So we want to know, is it fully fenced and gated, or do they keep everything inside a locked building? Because that would be a secure lot. Another thing to mention, that it asks, do you store autos anywhere other than your lot? And that's important because we need to know if that location should be listed on the policy in order for coverage to apply. They may not realize it, but there's no physical damage coverage if a loss occurs more than 45 days after the insured's use of an unlisted location begins. So we want to make sure that they don't get themselves into trouble by not telling us about that other spot. We want to know about the keys. Most companies are going to exclude theft if the keys are left in or on the vehicle, but keeping the keys locked up is also a deterrent to theft. As I just mentioned, our theft exclusion for an unsecured lot applies when the business is closed. But we see losses where someone will just nonchalantly walk by and take a set of keys off of the board where they're hanging out in the open, and off they go with a car. And then people are looking around going, hey, where'd that car go? So it's a good idea not to leave them out and to make sure that they are locked up. All right, now we can go to the next slide. And I am going to tell you a story. Once upon a time, a car dealer applied for property coverage. Their building was 2,000 square feet, but they were only using 1,000 of it. They wanted cheaper pricing, so they said to the insurance company, hey, we only use half of the building. It's only fair for you to rate the property based on half the square footage. How about it? And since the car dealer wasn't using the other 1,000 square feet, the insurance company said, okay. They charged half the price, and everyone lived happily ever after. Said nobody ever, right? Because as you know, the rating basis for property is square footage, period. Well, the rating basis for garage is people, period. Reading the top of this slide. List all owners, employees, and drivers. Include household members who drive your cars, contract drivers, 1099, and other employees who do not have their own insurance. Nowhere does this say to list only the people who drive your cars. And yet, time after time, the only people listed on the application are the drivers. We bind the account based on what was given to us in the signed application, and then the inspector goes out. And lo and behold, there are unreported employees. So now we have to go back and endorse the policy to add the unreported people, and absolutely nobody is living happily ever after here because it's not fun. So just get all the information up front. That way we'll know how to rate the thing, what to do for it, and then the inspection will go smoothly and there won't be any problems. If you take nothing else away from today's class, please remember this. The driver's license number is important for pulling MVRs, but if you're just trying to get a quick quote, you could just put in the state. We are looking for all employees to be licensed in the same state, especially if it's a dealer. If you give the date of birth and tell us about any accidents or violations, then that means your quote is priced correctly right out of the gate. We do need status to rate each person. We need to know, are they an owner? Are they furnished? What are they? So that's what we're looking for. And are there any questions on this? I don't see any. Let's go to the next one. Scheduled autos. Music writes scheduled autos in 8 states, so I listed the 3 that I thought you might come across. The others, just in case you're curious, are Alabama, Missouri, Mississippi, Montana, and Oklahoma. We can schedule up to 5 vehicles, and we're looking for private passenger autos, parts and roadside assistance vehicles, service or utility trailers, and even tow dollies. If they have 1 or 2 wreckers, we might be able to schedule them as well, as long as they're located in a rural area and are not in the business of towing for hire. We don't want to write towing for hire autos on the garage policy. Okay, I think that's that. We can go on to the next one. Okay, we're down to the coverage section of the application. So this is where you're going to pick your coverage and your limits. If you properly complete this, your underwriter can rate it up and get you a price more quickly. So you're going to choose your deductible for liability, put in your underlying limits in your aggregate. The radius helps us figure out what to charge. And again, it needs to match the states that they say they're going to in that dealer section of the app. Dealers, errors, and omissions is starting to get pretty popular. So I want to just mention, your insured might not need all 4 of those coverages. I don't think every dealer has a title agent or an insurance agent sitting in their office. So most of the time, Truth in Lending and Federal Odometer are the coverages that they need. And since we charge $50 per, you could save them $100 if they don't really need title or insurance agents. And then you can always package the part sales or the gas sales or anything like that by hitting that box there. The exclusions we've listed here. I don't think there's anything out of the ordinary. The leased autos in racing might be something I could hit on. So as I mentioned before, if they rent a vehicle or lease a vehicle, it needs to be because they're repairing the customer's auto. But if the lease is the method of finance, and it really is just like a dealer kind of thing where they transfer the title and they show themselves as a lien holder, that's not the same thing. We can do that. Racing is excluded. Work you performed, we won't cover the actual work, but we will cover the resulting damage if you were negligent. Classic example of that is the oil change. So if I change Teresa's oil and I forget to put the plug back in, she's going to get about 2 blocks down the road before her engine blows. And so it's not going to be garage keepers anymore. Now she's 2 blocks down the road. That's not in my care, custody, and control. So the resulting damage would be the blown engine. The insurance should pay for that, all things equal. And we're not going to pay for what she paid for the oil change. And that's that slide. Do we go to the next one? Very cool. All right. So remember, garage keepers covers non-owned autos in the insured's care, custody, and control. Legal liability means coverage is based on negligence. So you break it, you bought it. Direct excess only pays the customer's deductible back, and direct primary covers loss regardless of negligence. It's the broadest coverage, and sometimes you want to be careful with that, because if you've got a new venture and you're giving coverage on direct primary and a bunch of stuff happens and none of it's his fault, he could run into trouble trying to get a decently priced policy at renewal. Now, there's no coinsurance requirement for this coverage, but a good rule of thumb is maybe $10,000 per parking space or vehicle stored, as long as they're not focusing on high-valued vehicles. The in-tow, most carriers prefer that you write your in-tow coverage with the auto because of the tendency for loss, but it can be put here. Usually I'm just looking to know why it didn't go with the auto. Maybe the auto carrier doesn't offer it or something. Out of the coverages on the right, you're going to pick comp and collision or specified causes of loss in collision. Comp is obviously the broader coverage, and as a result, specified causes of loss is cheaper. And that's all I got on that one. All right. So this is just a reminder of the exclusions that apply to garage keepers coverage. The Saft Exclusion it's a music exclusion and refers to the secured lot, as we already discussed. And a buyback is available if they don't have a history of theft and the crime rating for the property is acceptable. Faulty work, just like in liability, we wouldn't pay for the faulty work, but if they cause resulting damage, we would cover that. And then there's the stereo exclusion and war. Nobody covers war. So, any questions on that one? No. Okay. Let's see here. This one, let's talk about the lot limit. So you want to make sure to fill in the lot limit and then also the max limit per vehicle, because that will impact pricing. So you want to make sure and give that right up front so that it can be properly rated and your quote is what you were looking for. We do offer false pretense if the dealer accompanies all test drives. We have a limit calculation section here, and I'll talk about false pretense more in a minute. The limit calculation is so that you can try to accommodate the coinsurance. So for garage, the coverage form has a 100% coinsurance requirement built in. There's a penalty if they're underinsured at the time of loss. So if you take a look at the value per vehicle on average and maximum and how many vehicles they have on the lot on average and maximum, then you should be able to come up with a number that makes sense that will make sure that they have the coverage they need. If you know that someone has a seasonal need, tell Teresa. We had one guy that had a terrible coinsurance penalty applied to him, and he had a loss in April. But the majority of the time, the limit that he had was more than adequate to cover his inventory. What happens in April? Well, everybody gets their tax refunds. So from about March through June, his inventory skyrocketed. So what we wound up doing for him, there was no reason to charge him for that huge amount of inventory the whole policy period. So we endorsed the policy to say that from, I think it was March 1st through, I think, June 30th or something like that, the limits are as follows. And we gave him the higher limits, and that way he just paid a prorated amount. He didn't have to have that awful high limit the whole time. Let's see here. The coverage applies to. Please try to get that information if you can. These boxes actually appear on the garage declarations page, and checking those boxes drives the dealer's physical damage coverage. So there may be more than one that apply. There may just be one. Most of the time, your interest in covered autos you own is going to be checked. I mean, that's just what it is. If they finance inventory, then you would check the box for the lost payee too. Maybe they sell some cars on consignment and they want to have coverage for those. So you're going to check at least one and up to 3 of those boxes. And I would point out that the specified causes of loss coverage is different. There were only 3 for garage keepers, but there are 6 for dealer's physical damage. So it is broader. Any questions so far? Okay, great. Now this screen mostly is just a reminder of what we're going to pay if in the event of a loss. So we are going to pay the lesser of the ACV or the cost to repair. Depreciation and condition do come into play when there is a total loss, but not betterment. And we've already discussed coinsurance, so I think we can just go on to the next slide. So let's see here. Number 3. I made a note on that one. Number 3 is a reminder that we don't cover leased or rented autos. And we did talk about this earlier, so as long as the customer's vehicle is being repaired by the insured, then we could. But otherwise, there is an exclusion.
Quick question.
Hi, Mario.
You,
yes, we'll talk.
Yes, I'm going to
yes.
go right back to that false pretense, and then we'll go forward. Or is it,
yeah, actually, you can just stay on the slide that you're on.
Right.
Yep, we can just stay here, and I actually am going to talk about some more false pretense information, Mario. So that's perfect. Let's see. Why don't we just do that now? So false pretense is excluded, but you can buy it back. False pretense is defined as someone causing the insured to voluntarily part with a covered auto by trick or scheme or under false pretenses. Most of the time, this involves a customer taking a car for a test drive and they go by themselves and then they just don't bring the car back. And that's not theft. It's false pretense because the vehicle was not stolen off the lot. It was taken under the pretense of a test drive. We actually had another situation this morning, and I thought of this talk today because I thought there would be another good example. The dealer sold a car to somebody, and it was a bad credit card. Turned out the credit card was stolen. And I do want to mention that there is an exclusion for loss where, for any reason, a bank or any other drawee fails to pay. So even if the insured had false pretense, unfortunately, that would not have been covered. So no bounced checks, no stolen credit cards, nothing like that. But it also covers if the insured gets a vehicle from a seller who doesn't have a legal title. So hopefully that helped. I do want to talk about number 5 for a second because people get confused by this one. So if there is a total loss to a dealer's auto, we owe the dealer back what they put into it, no more. So we ask for a bill of sale and we ask for any receipts for repairs or improvements or anything that they've done to the car. And then we deduct any coinsurance penalty, deductible, that kind of thing. But so many times a dealer will argue that he's owed what he could have sold the car for, but we don't owe him for his profit. And it's too bad because a lot of times they'll say, oh, I got this killer deal on this car I could have made, blah, blah, blah. Well, that's too bad, but you know, you can't insure people for profit. That would be against public policy too. And then think of the morale hazard that would cause. So I just did want to point that out. And then also, as we talked about, there's no coverage under number 6 for a vehicle that's been displayed or stored somewhere for longer than 45 days then after you started using the location. And if we don't have any other questions, we can go on and go to slide 18. Now here, these are the optional coverages that are available. Medical payments, you can do auto, you can do premises, or you can do combined. Personal injury protection is a no-fault coverage, and I don't think it applies in the states that most of you will see. It's required by statute if you have it. And uninsured or underinsured motorists, you guys know what that is from your own auto policies. If it is a PIP state, we only offer the basic limit per the statute. And then let's look into the broaden coverage. So if you get somebody that's asking you for personal injury liability, you might offer them broaden coverage because personal injury liability can be endorsed onto the policy all by itself, but it doesn't include the advertising aspect. So you can give them personal and advertising injury, some host liquor liability. It includes the damage to rented premises at no additional charge. Gives them some incidental medical malpractice if they render or fail to render some medical aid to someone that's on their premises. A little bit of boats, newly acquired businesses for 90 days, and some limited worldwide liability coverage. So you get a lot of bells and whistles for your buck on that one, and it might be something you want to offer. Hired auto, that's we write hired auto. We kind of want to know what the exposure is and why they need it, but we don't have a problem offering it. Drive other car, and I'll explain that one because that one tends to confuse people too. So if I'm a dealer and I'm furnished an auto, I have coverage for owned autos and for non-owned autos used in my garage operation. but I'm furnished in auto. So I might have to borrow a car from Renee because I have to go to a doctor's appointment and my car broke down and I don't have time to mess around. So I've got to get in my car and go. And if she loans me her car and I get in an accident, it's a non-owned car that is not used in my garage operation. So sorry, Renee, I don't have any insurance and I just caused a big accident. It's not good. So by offering drive other car to the principals, that will help them when they are furnished in auto because they own this dealership. And I think we can go on to the next slide. I don't see any questions. And finally, here are the options for an additional insured. The top two are the ones that are used most commonly. But when you ask for someone to be an additional insured or you're looking for a waiver of subro, please be sure to tell us what that relationship is and why this is wanted. An entity that is named as an additional insured in an endorsement to the garage policy is as much the insured in the context of our insuring agreement as is the named insured who purchased the policy. So think about that. It's not just throwing it on there for whatever reason. It's giving them the same coverage under the insuring agreement that we gave to the insured that purchased the policy. So it's going to be subject to the same exclusions, all of that. And the additional insured has the same right to a defense. So tell us who they are and why they need it. We need to be able to underwrite to that exposure as well. So that's why that's important. Congratulations, you've made it to the end of the presentation. Does anybody have questions?
Please type them in if you do. Meantime, I'm going to say thank you all for joining us today. We're interested in quoting and binding a garage business with you, so that's why we invest this kind of time. And Patty did a wonderful job of detailing the application in combination of being able to provide the right coverages for your garage insureds. Excuse me. Please contact Teresa if for more information. We will be sending out a garage application and some marketing material out to you tomorrow. So, but if you have any questions,
I see that there's a question.
Ah,
there is a question.
Okay.
About blanket. So I think we're talking about the blanket additional insured. Basically, with the blanket additional insured, a mobile operation might be a good one if they have a need to have all of their customers to be additional insureds on their policy. Basically, what it means is that instead of putting a separate additional insured form onto the policy for every entity that is going to be an AI, you put blanket coverage on there, and then you as an agent are responsible for keeping the list of all of the additional insureds that are covered under the blanket. So it's a good thing to do if they have a lot, but otherwise you wouldn't need it. And it only applies if it's required by contract. I do want to mention that. Okay.
Excellent. Excellent. Well, thank you again, Patty. You did a fabulous job, and we look forward to doing business with all of you out there. Have a great day.
Have a good day, everybody. Bye.